On Sunday, South Africa experienced history in the making as the Reserve Bank undertook a good bank, bad bank separation. It sounds all American. This is Tonight. I'm Bruce Whitfield, and tonight we'll look at the deeper repercussions with Coovadia, the Managing Director of the Banking Association of South Africa, and Stuart Theobald, Chairman of Intellidex. Both gentlemen, of course, have known the banking sector for a long time. Coovadia was the Deputy Managing Director of the Banking Association the last time things went pear-shaped. You like the common thread going through here, Coovadia.
I was deputy then.
You're a deputy. But when you look at it, I mean, is this shadows of 2002, 2003 all over again?
Well, yes and no. I think that the African bank thing, I guess, was on the horizon for quite some time. And Sambo Bank was not purely a microfinance bank.
No.
African Bank is. I think the reasons for what's happened, I think, are not exactly the same. So it's a shadow of what happened because another bank is going down. But the response of the Reserve Bank has been very different.
But it's interesting, they've got all American on us, Stuart. I mean, the good bank, bad bank split. We've learned from 2008, and we've learned from Lehman Brothers, and we've learned from the consequences of not stepping in at the time of Lehman Brothers and stepping in later by the Americans.
So this has become a popular way of dealing with banks in trouble globally. Just a week before, the Portuguese did it with their large commercial bank. The Nigerians have used the same form with sorting out their own banking crisis they had a few years ago. So it's become much more common, certainly much more common than it was at the time of Sambo. And it has distinct advantages, the main one being that the viable part of the bank can be put back on its feet and allowed to continue operating. Whereas with the approach of Sambo, that's just not an option. The approach is simply to wind up the bank and try and recover as much cash as possible to repay creditors. It's in effect liquidation. Whereas what we're seeing now has the distinct possibility of creating a viable bank that'll continue operating.
And that will cause some level of complication with all of the partners who are involved in this particular good bank into the future, because this is a conglomeration of South Africa's banks. How are they going to divvy it all up? Because, I mean, you must be seeing lots of wide eyes at the Banking Association as people come through the door.
Well, I'm not privy to the exact arrangements made between SAB and the various banks, but
there are 5 banks involved, aren't there?
Yeah, there are
5 banks plus the PIC.
Plus the PIC, yeah. So I guess they made some arrangements on how they're going to divvy it up. But I think, to me, what it does say is that it says that firstly, as what Stuart says, that African bank did good business and bad business. Okay, and so the good business, I think, has the potential of actually turning around well and has the potential of growing. I think what the banking sector was Sabi saying is that let's show confidence in the system itself. We show confidence in the good part of African bank, and we're willing to come to the party to do that.
What happens to the bad bank bit? And this is what's interesting as well, because we've got Tom Winterboer, very experienced campaigner from PwC, has run that financial services business for decades at PwC. The bad bank then is the asset of the state. It belongs to you and me, which is awesome. And what's that, 7 billion rands worth of loans stuck up in there?
Well, that's what it's more than. It's about 17 billion,
big
which SAB has paid 7.5 billion for. And SAB has indicated, and I'm sure under Tim's able hand, that they'll try to recover as much of that debt as possible so as to reduce the public's, I guess, exposure to African banks.
Some people say, Stuart Theobald, that African banks should be allowed to fail. You let the capitalist mindset simply take its course. There have been many people who said America wouldn't have its debt burden if we just let the American banks go to the wall. They kind of ignore the contagion potential and contagion threat. Did African bank really pose a contagion threat? Could we not just have let it go and moved on with our lives?
I think it's a hugely interesting question. The big difference between African Bank and Sambo was that African Bank was not funded by depositors. And that makes it very unusual. But African Bank was funded by various other capital providers. So there were bondholders who put in the biggest slice of money. A very significant amount of money, though, came from fund managers as well. And then, of course, there was shareholders' money. Now, the question is, what would the systemic implication be if those funders had been hit through a collapse of the bank.
So it's not a bank systemic issue, it's actually a capital market systemic threat.
That's right.
Yeah.
So if you substantially knock confidence, for example, in money market funds, money market funds collectively manage over R1 trillion.
Yeah.
They put in 56 billion rand of the big banks' cash comes out of money market funds. So you have to be very careful about the confidence, because the last thing you want is to trigger a loss of confidence in those kinds of capital markets, because that'll affect the entire financial
I got a
system.
call from an old guy last night saying my wife wants to withdraw her money from, I think it's the Coronation Money Market Fund. Should she do so? And you go, please don't.
Yeah.
You know, please stay calm.
Yeah, but I think this is the first test of that shadow banking system as a source of funds for banks. And I think we're learning some lessons. One of those lessons is that we need to be more careful about how risk is priced into those assets that are sitting in money market funds, because there are problems with a bond. You can see the price moving, right? But a money market fund is holding an over-the-counter instrument.
Yeah.
There's no visible pricing. There's no way for that fund to absorb increased risk.
You only sort of pick it up a couple of days later when you if you know where to look at the newspaper and have got better eyes than mine. Do you check out the pricing or what's happening in your money market instruments? Why is Capitec different? I mean, Capitec share prices come off a little bit. We've seen a little bit of volatility in the banks, which have got minuscule exposures to microlending. But why is Capitec different?
Well, I think the funding model is different. Capitec is a deposit-taking institution. They have retail deposits as well. They're not that dependent on capital markets. Secondly, I think Capitec's model has been a bit different. While they've also been aggressive, I think that they've grown at until very recently, they've grown at a slower pace than African Bank. I think that I don't think they've gone for the sort of client base that African Bank has been very aggressive at pursuing. I think they've been more diligent at the sort of client base they're going for. I think they've recognized that there's still growth potential amongst an unsecured loan demand that's not just coming from people who with changing economic times and with economic pressures will very easily go into default and will have
National Credit Act. It's got to be, we've got to look at this National Credit Act, we've got to look at the National Credit Regulator, and we've got to say, if the Act is good, then the regulator didn't do their job in terms of ensuring that the right checks and balances are in place to make sure that I don't come to you and borrow 1,000, come to Kaz and borrow 1,000, and then go and borrow 1,000 from my children's pensions. That's where this thing seems to have gone most pear-shaped, is the checks and balances haven't been adequate, Stuart.
Well, I think we need to separate the responsibilities of the different regulators. So the credit regulator is largely a market conduct overseer. So that's questions like, are interest rates fair? Do consumers understand products? Are the terms and conditions associated with them fair? Those are quite different questions to the supervisory capacity and oversight.
But there's a limit, but there's
right.
also the question, the National Credit Regulator is supposed to be putting in the guidelines and the systems to check the limits that you and I can borrow.
Yeah, and there's complications around that, and Cass, I think, is closer to that than me. And there have been efforts. There's now the credit amendment bill that is waiting proclamation that's going to enable the credit regulator to impose regulations that are going to deal with some of those problems. And at the same time, the National Treasury is attempting to restructure the architecture into a Twin Peaks model of systemic risk and market conduct, and that's going on. I think that's the right model. There's a lot of strong advantages to that. In terms of whether any failures by the credit regulator contributed to the collapse of African Bank, I don't think you can make that case.
Can we, Kaz?
Well, look, I can't say directly we can make that case, but what I will say is that I think that, to me, one of the lessons coming out of this is there's too much of a separation between, call it broad consumer protection legislation and call it broad prudential legislation, okay? I don't think that we're sitting down as the industry, and in this case, the credit regulator, for instance, and saying the demand for unsecured credit is not going to go away. I mean, simply because a couple of people have asked me now, does this mean the demand for unsecured credit is going to go? I said, of course not. The demand is not going to go away. There's one of two ways of addressing unsecured credit. One is, well, let people go into the informal market. The other
which is terrifying.
It's terrifying. The other is, how do we regulate, in this case, microcredit banks, in a way that there's a balance between consumer protection and the growth, responsible growth of that bank. Because it's got to make sense for those sorts of institutions to be providing that credit than others. And I don't think that sort of discussion has been had. And very often I think we need to identify the real touch points that need to be properly regulated and appropriately regulated, rather than take a mallet to this thing and regulate everything.
No, absolutely right. I mean, Stuart, also, I mean, the Reserve Bank. Jill Marcus in her talk on Sunday afternoon made it very clear that the business model was flawed, that they had been talking to African Bank for at least the last 18 months since they'd seen the big banks withdraw from the unsecured market quite quickly, and African Bank continue to fund the unsecured market. Could they have been a bit more active, a little bit more forceful in their regulatory prowess?
Look, we don't have access to what was going on behind the scenes. I'm sure that there always is a pretty vigorous engagement by the Reserve Bank where it perceives there to be a problem, and I'm sure lots of things were going on. Could the Reserve Bank have done more? Look, bank failures, I think, are an inevitable part of any market economy. Banks are there to absorb risk. Sometimes they make a mistake. We have extensive and elaborate oversight to try and minimize the chances of mistakes happening, but I think they're going to happen.
But
and
what's really
a
good about
Reserve
this
Bank
one,
has to be ready and poised to manage them when they
But what's happened is this thing has imploded, but the safety net is there.
Yeah.
And
Yeah.
the safety net is catching the fallout,
Yeah.
which is really important.
Yeah, and I think it's instructive to compare this to what happened with Sambo. Sambo, a bank that was a viable bank, was taken out of the market and closed down. That decision ended up costing the taxpayer over 7 billion rand, which was the guarantees that government had to make good on the solvency of the bank.
Is it different this time, Kaz? Last point?
Yeah, I think it is different this time. I think this time there's a recognition that there's different parts to this bank, and you need different responses with different
But the taxpayer probably won't be left out of pocket at the same extent.
Not to the same extent. Yeah.
And at that point, we will leave it. That was Coovadia, the Managing Director of the Banking Association of South Africa, and Stuart Theobald, the Chairman of Intellidex. Thank you for watching. There'll be more tonight, tomorrow. Until then, good night and goodbye.